ticker SGNFX. Gerald, right now, Roku on your list. I see Snap, I see Docusign, all stocks that seem to be enjoying a day where investors are expressing a little bit of trepidation about the vaccination rate here.
Oliver, thanks for having me back on the show. I really appreciate it.
Thank you.
You're welcome. We think that the news for Johnson & Johnson's vaccine is providing an impetus for these stocks, in particular Roku for cord cutters, Snap for the Generation Z, which are the 20-year-olds and 13-year-olds in that particular segment, and also the migration to the internet with Docusign.
So, Gerald, these stocks, do they need to keep having this basically bad news? I mean, I know the point that you've made before is that they can still thrive in a normal world post-COVID, but when they've struggled the last couple months and then they wake up the past week around some news like this, what does it tell you? I mean, are these stocks still going to be at risk if we just keep getting folks vaccinated and out?
I think that the market has become more balanced with the vaccine rollouts and the people going out and traveling and spending more time at casinos, restaurants, shows, things like that. So we think that the market is more balanced. However, once there's somewhat of an equalization between growth and value, we think that the companies that we're in, which are showing revenue growth of 30% or higher, will still be able to compound their business valuations going into 2022 and also 2023.
So thinking about the kind of theme of what's going to drive this going forward for these companies, do you need to see the numbers on the earnings season just like blow it out of the water? When the stocks have moved the way that they have, do we need to see huge active users for Snap? Do we need to get some big top line year-over-year changes in Docusign revenue? What are the kind of standards that these companies are going to have to deliver?
I think that the standards and the bar has been set very low. The reason is because the stay-at-home stocks, the internet-related stocks, NASDAQ related stocks have been really sold off in the first quarter. They continued higher going into February, and they sold off. So the sentiment for these stocks and the bars have been set very low. So we're expecting the rally, which will start, could be today, to continue for the next 6 months at least.
I mean, Snap's still up 360%. Gerald, I got Roku up 300% over the past year. The bar is low for these earnings?
Well, currently, yes. For the current quarter, the stay-at-home stock sold off. Everyone was piling into the financial service companies such as Bank of America. They were piling into the energy stocks, the value stocks, small cap, mid cap, large cap. Those are the stocks that did well in the first 3 months of this year. The stocks that we buy, the growth stocks, sold off. They continue to do very well financially. Their income statements are compounding at 30% and higher, in particular Roku and Docusign. So we think since the sentiment is low, that these stocks will do well for the rest of the year.
It seems like a good test then of the market's kind of ability to process these valuations, right? Because to your point here, given that they've dropped significantly from the highs, of course, the percentages I'm quoting over the past year, your point as well, in this lead up to this quarter, they've gotten blasted off the highs. So if they then don't rally on the reports, then I guess we'll see that the valuations then will be telling us, okay, they're still too elevated. Would that be a fair conclusion then, Gerald, with this kind of hypothetical?
Yes. If the vaccines are successful and the stimulus checks that go out are successful in driving consumer spending, the value stocks rally, and the growth stocks continue to underperform. That could last another 3 months, maybe. We're not sure. I think that, like last year, we get the bottoming of these stocks after the first quarter. We get the news on their top lines, and stocks rally going into the second quarter, third quarter, and fourth quarter, and we have a decent return on these types of stocks for 2021.